Welcome back. Today, we are going to talk to Cory Klippsten, CEO of Swan Bitcoin, the parent company of Hard Money. Now, Cory has spent the last year calling out fraudsters and scammers in the crypto space and has really made a name for himself doing it. He's also saved people millions of dollars by taking such a direct stance and warning people to take their money off of these yield farming exchanges. Take a look.
At the end of the day, he was clearly gambling with customer funds. Nobody was calling him a kid until last week, right? He was the next Warren Buffett, et cetera, et cetera. Frankly, I've been on a warpath the entire year with features in New York Times, Wall Street Journal, Barron's, CNBC, et cetera. None of these people actually know what's going on. Marketing, scheming, pumping, dumping, scamming. They don't know where their exposure is because the stuff isn't regulated, there's no transparency, and their lending standards are basically just like, I love you, bro, on Telegram. So that's what I started asking questions on Twitter and on multiple TV appearances dating back to June, July, August, all through the summer. There is no such thing as 6% annual yield risk-free. This fraud was only going to get bigger if it didn't get exposed now. One more big shoe to drop could be ugly.
If there is.
If there is.
Do you think there is?
We'll see.
All right, as you saw from those clips, no one has been as vocal as Cory, who joins me now. Cory, welcome to Hard Money.
Hi, Natalie. Great to be here.
All right, first I want to get your reaction to this investigation because we now know that members at the Department of Justice, potentially the SEC, are looking into SBF and what happened at FTX. What's the latest in your opinion?
Yeah, I think really right now what we're seeing is a lot of people digging in from different sides. So, crypto and Bitcoin people digging in, journalists digging in, and regulators digging in and trying to figure out what actually happened. So that's one thing, is actually trying to find the truth. And then the second thing that's going on is the battling of narratives, because there is sort of a media and SBF-led narrative around, oh, he's just a kid who made some mistakes, got out over his skis, this wasn't fraud. And by the way, please don't claw back all the money that he gave away. So there's two things going on.
We covered in our special report some of the things he said to mainstream media. He talked to Andrew Sorkin from the New York Times as well as ABC News. Did you watch those interviews? And if so, what was your reaction?
Yeah, I have. And it's very clear that he's lying through his teeth like he tends to and has been since June, when he kind of really exploded onto the scene in the wake of the crypto CeFi lender blowups back in May, June. And this was when they were calling him the JP Morgan of crypto. And that was obviously very encouraged by him and his PR team, again, because he was trying to pull off a Houdini trick and escape the liabilities that Alameda FTX that he owed to some of these companies that were going under, because he knew that their trustees, once they got a hold and got those companies into bankruptcy, that they would call the loans they had out to Sam. So, basically just interesting that he's continuing to dig himself a deeper hole, because the things he's saying now are lies as well. And I think the truth will come out eventually.
Well, we know that his first law firm dropped him. The lawyers have been advising against these interviews. Now we read this week that he might have hired Ghislaine Maxwell's defense attorney. Do you think this strategy is going to work for him?
It's probably more about whether he can have a job in polite society around his parents or whatever after he does his jail time. So if he can convince enough people and the narrative can be just confusing enough, and enough people that have only heard, one or two things about FTX and Sam Bankman-Fried might believe the puff piece in the New York Times, or might believe that something, that somebody said on TV, like Mr. Wonderful, lying about, yes, I would invest in Sam again, things like that. So he's just trying to do the, confuse and obfuscate and get as many things out there being said as possible so that the truth will get drowned out by all these other narratives.
So many people lost money. There are so many questions about how this happened and questions about whether he would have gotten away with it a little bit longer had Bitcoin not crashed in price this year. But what do you think justice would be in this situation? Is it jail? But what about the customers who aren't going to be made whole?
Yeah, so it's interesting. I still don't believe 1 million accounts at all. That seems super high. I just don't ever run across anybody that uses FTX in retail. It's just very, very rare. So I kind of suspect that the numbers are actually much, much smaller on the retail side than what they've promoted. It might be that, that's all the people that have ever signed up for an account, right? Similar to what we saw with Celsius, where I think they were claiming 2 or 3 million users or something. But at the end of the day, there were, maybe a couple 100,000 that actually used the platform. So I think it'll be kind of similar. This was a very popular trading venue for professional traders. And in particular, it was popular in the last couple of years. One thing that I think has come out that seems very, very plausible, and this just hit Twitter a couple of days ago and seemed like a very convincing thread, is that in the beginning, Alameda was ripping the faces off of the retail customers and kind of the unsophisticated traders on FTX. And that was a very beneficial relationship for them because they were front running everybody's orders and, basically taking that arbitrage and just stealing from people essentially on an unregulated exchange. And then what happened is sophisticated traders and hedge funds started using FTX. And because Alameda was the primary market maker on FTX, it seems very likely that those traders were much better than Sam, who had 18 months of experience at Jane Street, and Caroline, who's 28 or whatever and doesn't understand stop losses. So these were not actually very good traders, and they ended up just getting their faces ripped off, and that created the massive hole, which is why he stole the funds in the first place from, for Alameda from FTX, because they were actually getting their faces ripped off by good traders. And then that is why they tried to bolt into retail. So that's why they started sponsoring stadiums and bought Blockfolio and were trying to do FTX retail, is really because they knew they would be able to get fees off of retail, and they were trying to just somehow escape the fact that they weren't even good at a rigged game.
Cory, we saw clips of you really hammering this message in the media, calling this out. You were doing it, many months prior to this FTX blow up. And I know that a lot of people contacted you. They pulled off money off of exchanges. Others were asking you questions. Can you share any of those anecdotes? What have you been hearing from customers that maybe used to have their money on these platforms?
Yeah, I've gotten hundreds and hundreds of messages, DMs on Twitter, emails, other people getting in touch through friends of mine, just, kind of the thank yous for getting off of these platforms. Obviously, hundreds to thousands of people pulled money off of Celsius back in May when I was ringing the alarm bell there. A lot of people took another look at FTX over the last few months. I started obviously saying the refrain, "Don't trust Sam Bankman-Fried," back in June, and kind of hammered that home all summer and fall. So hopefully a lot of people actually listened and at least took their Bitcoin, if they had Bitcoin, on FTX and took it off. It's gratifying, but it's also just sad. I'm glad for each individual person. I know people that have pulled many millions of dollars off of these platforms just in the nick of time, for instance. And this is not just unsophisticated people. This is often like really, really smart people that were thinking about, Gemini Earn as being promoted by the Winklevi, and the Winklevi always say, crypto needs rules, and they talk to regulators all the time. And that's kind of their entire positioning for their company over at Gemini, is to be pro-regulation. And yet they're doing this risky thing with Genesis, with Gemini Earn, and then not standing behind it at all. Not coming out of their own pockets, to my knowledge, to try to make people whole after the blow up and after losing all that money. So, I think across the board, this search for yield, which was kind of kicked off in the crypto space by the GBTC arb trade. This is the Grayscale Bitcoin Trust, kind of created this opportunity for relatively risk-free yield until it wasn't anymore. And this was just because you could check dollars or Bitcoin into the GBTC Trust at NAV, and then 6 months later it unlocks and you could sell it for the market price, which for years traded at a premium to Bitcoin price. And the problem was, just like like a bartender or a stripper that was flipping houses from 2004 to 2008, usually they flip one house, then they flip two houses, and by the time you get to 2008, they're into it for like a resort in Mexico and 16 houses in Scottsdale and 7 in Vegas. And that's when the market turns. And so they lose more money than they ever made in the history of their business. Right. And that's exactly what happened with most of these shops in the first half of 2021. This created the huge hole and ended the risk-free arbitrage of being able to generate yield on crypto deposits. That's when everybody actually blew up, was in spring, summer of 2021. That's when Celsius actually blew up and they papered it over by raising money. It's probably when Three Arrows Capital had their first hole. It seems pretty clear that's when Alameda first went way in the hole, was kind of the same time. And so many people were plowed into that same exact trade. And when it turned on them, they all had their largest positions ever on at the time.
Yeah, it's interesting that there were some quote unquote sophisticated investors who did not do their due diligence with platforms like this. Cory, I wanted to ask you, because there are people saying that this is going to set the whole industry, the space back, but I think this makes Bitcoin look very good. It highlights the value proposition of Bitcoin and the importance of decentralization and scarcity. So what's been happening? I think a lot of people have been moving on to the Bitcoin only platforms and also taking self-custody. Has that been happening with Swan?
Yeah, obviously there's been a massive rush of people wanting to learn more about self-custody. We had a webinar with Stefan Livera from the Stefan Livera podcast that a couple thousand of people signed up for. And, that was just incredible last week. We had our biggest month by far of the year in November for new user signups and for trading volume, just people buying Bitcoin. Obviously, we don't have a sell button, so just people buying Bitcoin. So, I think the world is turning toward the Bitcoiner message, and I think it's long overdue. And I hope we can take advantage of this moment and really extend a hand and let people know that Bitcoin is not crypto, not your keys, not your coins. Self-custody is kind of the goal here. If you want to leave it with a custodian for a while, that's fine, but understand the risks and make sure you choose your custodian well, and make sure they're not rehypothecating. You definitely don't want to be leaving your coins with a business that's lending them out the back door.
Right. Well, I imagine during the height of the bull market, people were probably saying to you, hello, why aren't you in this crypto space? Look how much money these tokens are making. But you made a very specific decision a very long time ago to be Bitcoin only. So now are people coming to you saying, wow, I think you actually had the right call?
Yeah, I think it's pretty obvious, and I think people are starting to actually pay attention to the numbers, like the research we put out over the summer that, only 3 out of 22,000 altcoins have ever had a new all-time high in Bitcoin terms, 3 or more years later after their first all-time high. So these things all bleed out to zero in Bitcoin terms over time. I think other things we're seeing is, there's evidence of, what people actually consider to be a store of value. You've got the info out now about the BlockFi card, now that it's kind of on the block and people are poking around. And even after they added all these other altcoins like, Ethereum and Litecoin, et cetera, as potential rewards, and they did all the marketing behind that for a year, since the introduction of altcoins to their rewards program, it remained 97% Bitcoin. Nobody wants to earn any of these altcoins, for instance, as credit card rewards. It's Bitcoin that people want to buy and hold. Bitcoin is for saving. Bitcoin is a store of wealth. Bitcoin is a bet on this monetary network becoming the global reserve asset in the way that we humans communicate price signal to each other, 8 billion strong in the not too distant future. And crypto is for gambling, it's for trading, it's for rug pulling, it's for pumping and dumping, it's for scamming, and it's basically just for Ponzi marketing. So very distinct line in the sand between Bitcoin and crypto at this point, and it's really, really hard. You have to have your head in the sand to not see the difference.
Well, Cory, it's the holiday season. A lot of people are gathering with relatives, people who may not be in the space, who are even more skeptical of it than ever because of what they saw with FTX. What's your advice for people who are trying to orange pill their family, their friends over the next couple of weeks? What should they tell them given what has happened with FTX?
Yeah, let it come to you, and just remember, Bitcoin is not the same thing as crypto. This is not those scams and those blowups you hear about. Bitcoin continues to do exactly what it's done since day one, coming up on 14 years now. TikTok, next block. I think we've all kind of settled on having an understanding of money and what money is and what it's not is probably the easiest way to ease people into thinking about Bitcoin. So that's always a good place to start, is just kind of like a more casual conversation, not hitting them hard with the white paper, but just talking about their conception of money and, why does the Turkish lira lose value versus the dollar, and how come the dollar has lost so much value over the last 50 years, and just kind of coming at it from that direction of getting them to understand the difference between sound money and centrally controlled, printed out of thin air money, which is, again, what all the altcoins are too. They're all fiat.
Well, a lot of people are concerned there's another domino to fall rather soon. What are you looking closely at, since I know you're staying on top of all of this and you've been monitoring it for the last several months as this unfolded in the crypto space?
Yeah, so I am and I'm not. Obviously very busy. We've been hiring like crazy, and Swan is growing by leaps and bounds right now, and tons of institutional investor interest in Swan, because obviously it looks like our hypothesis about Bitcoin only is proving to be the correct one. So been pretty busy with that. But I'd say the two big ones out there that are obviously flawed business models that can't really make it are like crypto.com and Nexo. So they're kind of the ones that look like Celsius and Voyager and BlockFi. They're offshore. They have their own tokens that they printed out of thin air and that they manipulate and closely control. And they offer these crazy yields on deposits, and then they gamble it out the back door. So, Nexo has openly stated what they do with these things, and it's all just a big pack of lies as far as how they claim to be able to generate this yield. So, I would just warn anybody and everybody, don't keep your coins on crypto.com. Don't keep your coins on Nexo. I'd love to place a bet on the over under of what year crypto.com is removed from the Los Angeles basketball and hockey stadium here where I live. I would say very small chance they make it to the end of 2024. So anybody wants to take the other side of that bet, get in touch.
All right. Well, Cory, thank you so much. I know a lot of people in the audience thank you for helping them sort of sort out what's been happening within this crypto crash and warning them about the dangers of chasing yield, is really what we've all learned in this last year. We hope you enjoyed that interview. Make sure to like this video and subscribe to our new YouTube page so you don't miss out on any hard money content.